For more on the market action as we head into the middle of this trading week, let's bring in Bob Dahl, Chief Equity Strategist and Senior Portfolio Manager at Nuveen. Bob, so quick reaction from today's trading. It seems to be a pretty calm day relative to perhaps the last couple of weeks that we've seen.
No question about it. We've had a lot of volatility, obviously, since the bear market, but the last couple of weeks it shot up again, and now we can relax a little bit, at least for the first few hours. We have 2 hours left, who knows? But yeah, it's calmed down a bit as prices are settling at reasonably high levels.
Yeah, and then, of course, we can't ignore Fed Chair Powell's testimony, second day of testimony on Capitol Hill today. Yesterday was, of course, with the Senate. Today is before the House Financial Services Committee. Overall, nothing particularly eye-grabbing, although he did have some choice words when it came to the need and the urging for Congress to actually provide more fiscal stimulus.
I would think that it would be a concern if Congress were to pull back from the support that it's providing too quickly. I wouldn't presume to prescribe exactly what you should or should not do, but I would say that it would be wise to look at ways to continue to support both people who are out of work and also smaller businesses that may not have vast resources for a continued period of time, not forever, but for a period of time so that we can get through this critical phase. The economy is just now beginning to recover. It's a critical phase, and I think that support would be well placed at this time.
Bob, of course, Chair Powell is emphasizing that this is a critical phase. He's sort of reiterating some of his comments he's made over the past couple of weeks and months about this unequal recovery. What's your reaction here? How do you anticipate that markets will actually, really react to this in the weeks to come?
There's no question the policy, both monetary and fiscal, has been gargantuan, and that's why the market's where it is. And I think the market has gotten dependent on that kind of that heroin, if you will, to keep it going. So we still have, from the bills that have already been passed, somewhere between $500 and $1 trillion to be distributed. So there's more in the pipeline, but I hear what he's saying. Look, Nancy Pelosi a month ago said $3 trillion. The president sees November right down the line. He wants to spend some more money. The question will be, can the Republicans and Democrats decide and agree and compromise? And I suspect we'll get a little from all sides. The Democrats will get some state and local aid. The Republicans will get some of the liability protection they want. The consumer will get some more. It'll be a little bit of everything. So if you need some money, get in line, as it were.
Yeah, well, I think shot of heroin is actually an apt way to describe this. When you think about future stimulus on the way, what is your take here when you figure out the calculus of, okay, are individual checks to households the best method here? Is there going to be an increased PPP program? In your mind, from the investor standpoint, what would actually be the most effective when it comes to juicing the markets?
I think there'll be some of all of that, but if I had my druthers, it'd be, let's make sure these companies that are struggling can make it from here to there. And let's make sure that the liability of them reopening does not cripple them either. So that's part of where I'd like to see the money going, and some will go in those directions. At some point, the question will be, can the economy get back up on its own 2 feet? And while it's early days, we've obviously seen more of a V than many people thought. My guess is we'll see more of that good news on the V, and then at some point, it'll get a little bumpier and a little non-consistent. Still moving up and to the right, but in a bumpier, wavier way.
One of the arguments, of course, for that V-shaped recovery, which seems to be have some hazy prospects during this time, is the promising, encouraging developments in the science world, at the very least. Not exactly vaccine news, but of course, Regeneron has started its first trials for its antiviral antibody cocktail, and University of Oxford researchers have claimed that a cheap steroid, dexamethasone, could improve the survival in severe COVID-19 patients. As you look at the scientific community and the sorts of developments that are coming out of that world, what's your timeline here as you look at the end of 2020? Do you anticipate that the economy will be able to get back up and running just because some of these cocktails, in a hybrid sort of form will be effective?
So I think the economy will get up on its own 2 feet regardless, because people are tired of staying inside, if you will. Now, that isn't to say we're going to an economic level like we were in the first half of the first quarter. We're going to bounce from very low levels to more respectable levels. To get back to those old levels, yes, will require a vaccine, in my view. And who knows? What we do know, and you already hinted at this, that the scientific community is working 24/7, cooperating with one another, and we're going to get some good stuff, whether it be prophylactics, therapeutics, or some actual vaccine at some point.
And then I want to kind of dip on the bond area. When you look at the benchmark 10-year, the yield right now is sitting at 0.745%. According to your latest note, your projections here is you expect that the 10-year yield will hit 1% by the end of this year. What's kind of the argument for this case?
Well, you'll recall a few weeks ago, 3-4, we were at 91.91, so we were well on our way. It's a function of the economy is doing better, inflationary expectations are moving up a little bit. The economy, because it's doing better, is going to cause more demand for funds. There's plenty out there, but interest rates at 0.74, I don't think are consistent with an S&P at 31.35. So if the economy is doing better and 3,100 makes sense on the S&P, the 10-year Treasury yield's got to move up some.
Thanks so much, Bob Dahl, Chief Equity Strategist and Senior Portfolio Manager at Nuveen. Always appreciate your insights.
Thank you. All the best.
Hey investors, Zach Guzman here. Are you interested in learning more about the markets and getting the latest financial news? Well, then click right here to subscribe to our Yahoo Finance YouTube channel. Get the latest up-to-the-minute market analysis, big interviews in the world of finance, and information on how to manage your money every day wherever you are.